All right, so in today's video, I'm going to be covering over entries and stop loss placement. All right, so let's get right into it. So starting off with entries. Now, it is important to note that the reasoning behind why I put analysis before the actual execution in this series of videos is because execution is a pattern, and a pattern is only to be looked at after the logic has been formed, right? A lot of people look at uh, entry models as the reason to get into a setup, right? Entry models should only be looked at after the analysis has been put in, right? There has to be criteria in which when you start to look for entries, not simply just looking at them as a pattern, okay? So I wanted to start off with that because it is the most important part of trading is why you're looking to enter somewhere, not the actual pattern of the entry itself. All right. Now, when we actually get down to the entry models, there's three different entry models that I will personally take. Okay. Number one is simply turtle soup. This is my bread and butter. This is what I look for in every single trade that I take. 95% of the trades that I take are going to be this. Okay. Now, another entry model I have is my confirmation entry. Okay. Now, I personally prefer to take turtle soup, but if I do miss the turtle soup, I will look to find some form of confirmation entry, which I'll explain in a bit. Right. Now, if I miss both of these, the third one is going to be the OTE, which again, I will go through these one by one, explain them with a few trades that we've had in the past couple weeks, and let's get right into it. So if we look at, let's say this week, for example, we were short-term bullish. We delivered out of a weekly gap. We had a daily rejection block here. And we also had a 4-hour breaker here. Okay. So this is three setups. We have a soup inside the weekly gap. We have a soup inside the 4-hour breaker. And we have a soup inside the daily rejection block. Okay. Now, and let me bring this down here a little bit. So one of the reasons why I prefer turtle soup over every other entry model is because turtle soup is very black and white. Let's say you have a key level, for example, and price goes into your key level, it goes lower, you enter, it soups again, and then drops. And then your idea was correct, but you still took a loss. Okay? This is what I do not like. When my idea is correct, I like to have a winning trade idea. I don't like to be correct in my analysis and still be taking losses. Turtle soup voids this completely because instead of trading the reaction out of a key level, you're trading the key level itself. So if I expect a soup inside of this level, then I would look at this level and say, okay, at what point in price, if it is hit, does this level now being invalidated, right? So, for example, if this price point was hit, I would say that this key level is not holding and the idea is incorrect. Okay, that is why turtle soup is my preferred entry because it's very black and white. You're either right or you're wrong. And with anything other than turtle soup, you can often get caught up in the lower time frame reactions. And if price action is unfavorable and it's not quick and easy, which of course we want it to be, but it's not always like that, then you can get caught up in those lower time frame consolidations, so those resoups, or even possibly when we just take out a high and give zero entries, right? So turtle soup kind of voids all that. You're simply, instead of trading a reaction out of the key level you're watching, you're trading the key level itself. You're trading the stop run inside of the key level itself, right? So if we look at this on these three entries down here, we have one, drop below a low, two, drop below a low, three, drop below a low. Now, what do I look for when I'm taking turtle soup? So a lot of people look for these lower time frame patterns of we close below the low, we soup with the next 15-minute, or we have a double soup below the low, all this stuff, okay? if you want to keep your trading extremely simple and consistent, all you need to think about, if I clear these charts, there are stops below this low here. There are stops below this low here. There's stops below this low here. Whenever price purges these stops, so when orders flow into the market, when this low is being taken out, you want to buy those orders. I'm not looking at a pattern of some lower time frame BS. I'm not looking at anything outside of stops are being ran, and I want to be the counterparty to these positions that are flooding into the market, right? So when these stops are engaged, I'm buying below the low. Again, I'm not looking at a pattern. I'm simply buying. Same thing here. I'm not looking at a pattern. I'm buying, right? A lot of people try to get too perfect with their entry when let the trend make your money. You don't need to have the tiniest stop loss, the most precision entry. All you need to do is catch trends consistently, right? And Turtle Soup allows for high RR in doing so, okay? A lot of people try to overanalyze execution and they end up underanalyzing analysis, right? All you need to be is on the right side of the trend and frame high probability setups with high RR. That's it, right? So for this first entry, I do not look at a pattern whatsoever. And again, I am 95% of the time, I'm looking to trade this. I'm looking to trade a stop run inside a level, enter, stop run inside a level, enter, stop run inside a level, enter. Nothing on the lower time frames here, okay? Now, if we mark all the levels, so we had the weekly gap, we had the 4-hour breaker, and then we had the daily rejection block. And these are all setups I have traded personally. If I am to miss the Turtle Soup, I look for a confirmation entry. Now, what is a confirmation entry? Okay, a confirmation entry is a shift in order flow off of the level you're looking to hold. Now, again, I don't look at patterns, I look at context. Okay, so how can we infer that order flow is shifting? Well, there's two different ways. Number one is a shift in market profile. So if we take out a low and we start shifting through a high, that means retracements are for buying. Retracement into what? Into any key level or below any low, right? After order flow switches from a price level that you expect to be a longer term swing point, after we shift through a high, which is a shift in market profile, retracements are for buying. Same thing over here. We take out this low, we shift through a high, retracements are for buying. You can see the same thing on this one. We take out a low, we shift through a high, retracements are for buying. And again, what do you buy? Now, me personally, I prefer breakers, order blocks, and gaps. Okay, and I prefer to view this on a 15-minute chart. Now, if you're more of an intraday trader, you can go to a 5-minute. If you're more of a scalper, you can go to a 1-minute. For me and my system, I prefer a 15-minute, but that doesn't mean you can't use other time frames. Okay, but again, this is number one. This is the first confirmation of a shift in order flow. The second confirmation is PDA shifting. So what does this mean? This means when, let's say, and let me draw a little chart over here. Let's say the high we have to shift through is up here, and we're all the way down here, okay? If you let it shift through this high, you've already missed basically the move. So another way that we can probe order flow and find early indications of it shifting is when bearish levels are getting disrespected at the same time bullish levels are getting created, right? So let's say we have a bearish gap here, but we're creating a 15-minute order block and we shift through this gap. This is an indication of order flow switching, in which before we shift this high, you can anticipate the low being in, right? Now notice, I'm not using patterns of we create a low, we create an order block, or we create a low, we create a gap. I'm using the context of order flow switching off of a predetermined level we expect to hold. And again, what is order flow switching? Well, we can see it here. We disrespect a bearish 15-minute gap, and we create an order block, right? Or we go over here. This one, we shifted a high before we disrespected any bearish PD array. So you would use this as your confirmation of an order flow switch. If we go to this one, same thing here. We shifted a high, so this would be your confirmation of order flow switch. All right? Now, if I go to another setup that I took that was based off of this exact same logic, was here. Okay? Now, I missed the turtle soup on here. So what is my next entry? My next entry is a confirmation entry on a 15-minute chart, which is what? It's either the shift in order flow below a low or the shift in PD arrays. Now, if we look at this chart, for example, we took out this high and we had a soup of these lows. A soup of these lows would mean that this price action in here should be a breaker. Okay? Is this breaker holding on this delivery lower? No. And at the same time that this bullish PD array is getting disrespected here, we are creating a bearish 15-minute gap. Okay? That was the means for entry inside of this gap, was the idea that order flow is switching off of a high I already predetermined from the higher time frame analysis, should reject and hold the target. Okay? So that's the context behind it. Again, a lot of people look at entry models as patterns. They look at order blocks off of highs. They look at gaps off of highs. What you want to do is you want to add logic to the pattern. Why should you trade this order block? Why should you wait for this order block and maybe wait for a gap or wait for the next order block, right? That context comes from viewing, instead of viewing PD arrays as patterns, view them as order flow, right? Instead of viewing, let's say, an order block off of a turtle soup, ask yourself, did this order block invalidate previous order flow? And if not, then you should probably wait. And if it did, then take it, right? So the confirmation entry is all about you miss the actual soup itself. You wait for a shift in order flow, again, either through a lower high or through PD arrays switching, and then you take an entry. Any retracement, right? You seek for an entry, okay? Now, the third and final entry that I will take is the OTE, okay? Now, an OTE entry is, let's say you're looking to trade a daily candle. That daily candle creates lower high of day. And let's just say, for example, that lower high of day is created in London, okay? When London, again, you miss the soup, you miss the confirmation entry, okay? When London is a low that we expect to hold, right? So a longer term low that we expect to hold. And London creates a key level off of it, let's say a 4-hour, hourly, whatever it is. We expect key levels off of protected lows to hold towards our high time frame analysis, okay? So an OTE entry is simply a turtle soup inside of a key level that was created off of the lower high of day, right? So let's say, in another example, if this is Asia, we see Asia has a protected soup, we expand off of it, Asia creates a 4-hour order block. If London is running into this 4-hour order block below a low, that gives a valid OTE entry. And again, an OTE entry is basically you miss the wick of the candle, and during this expansion period, a retracement back down into this, into the key levels created here before we start expanding higher. This is all an OTE entry is. Okay, so whether this is London and this OTE is in New York, whether this is in Asia, this OTE is in London, whether this is in New York, this OTE is PM session or next day Asia, okay, That's how you want to view the OTE entry, is you miss the actual lower high. That lower high creates an hourly or 4-hour key level. And then you trade that 4-hour key level as a continuation of the current lower high. Okay? That's the idea behind it. Now that we've gone through, and I guess I can show an example of this as well. With this weekly gap here, this weekly gap creates what? It creates an hourly breaker off of it. This hourly breaker here has a drop below a low inside of it. Here's your OTE entry. We get the low in London, we expand, we retrace in New York, 9 o'clock, below a low, inside a key level that London created. And again, why is this key level high probability? Because we trust this low to hold until the target is met based on our high time frame analysis. So expansion, retracement, expansion. Okay. If we look at the entry over here, here it is. We see we have a turtle soup. We expand, we created I believe it was a 4-hour order block here. We have a drop below a low inside of Asia, expansion. Here's your OTE. All right. Now, when it comes to stop loss placement, now that we've gone through the entries a bit, so stop loss placement is different per the entry model that you use, right? So again, for me personally, I prefer turtle soup. It's a very black and white way of trading the charts. I don't lose when my idea is correct, and that's my main priority. I'd rather focus on the high time frame positioning than the lower time frame action, right? Lower time frame action can be very trappy and tricky at times, and turtle soup completely voids that, right? So when you're trading turtle soup, there's a few different ways that you can use stop loss placements. Number one, and I'm just going to use this line as a key level example, right? So if this is your key level, and let's say you're trading a turtle soup into this level, okay? There's really 3 different ways that I look and view stop losses. So number one is I'm always looking, is there a intermediate term high or low to the left that I can use? Now, why do intermediate term highs and lows work? Because let's say I have a high, an intermediate term high here that we expand lower from, okay? If this high is to be hit, that means the range that I'm trading is getting expanded through. So this intermediate term high is now a liquidity target past the range that I'm trading. AKA meaning my range is no longer a turtle soup. If the range that you're trading is seeking further liquidity outside of the range, then you're likely not in a turtle soup, and your key level likely is not holding, in which a invalidation point would be a good place to get out of that setup, right? And same thing for the flip side. If you are wanting to long a low here, and there is a low nested below the level, if this range is seeking further liquidity, then it's likely that the range is not a turtle soup, because it's still seeking and extending towards downside liquidity pools past your level and past your range, right? Again, meaning that you likely want to get out of that position because it is not a turtle soup. Okay. Now, if there is no intermediate term high or low, I look for lower time frame key levels. So let's say I'm trading a daily order block here, and inside of this daily order block, there is an hourly gap. Well, an early indication of this daily order block failing would be the hourly gap inside of the daily order block being closed through. So a stop loss level would be trusting the lower time frame levels that coincide with your higher time frame level, right? When I traded this rejection block here on Euro, if I can find it, here it is. When I traded this rejection block here, and I go to an hourly chart, I had this breaker, right? So what was lined up with my level? it was this breaker, and I had an intermediate term low below this turtle soup here. So this was my stop loss for the setup, right? Now, if there wasn't an intermediate term low here, I would seek some form of key level to protect my stop loss inside of my higher time frame level. All right. Again, with the example above, if there is no intermediate term high or low, you want to look for lower time frame levels inside of your higher time frame level that can protect it. Right. So you can go through a 4, go through an hourly, even to a 15-minute if there's nothing. And look, like maybe there's an hourly gap. Maybe there's a breaker that can protect your stop loss and you can put it above, right? All these lower time frame levels are early indications of the key level you're trading is likely to fail if they are to be broken. So it's a good place to put your stop loss as an invalidation point for that setup. Okay. Now the third, and I try not to do this one, but it is sometimes necessary, is a static stop loss. Now, a static stop loss is when there is nothing to the left of you, right? So let's say you're taking a higher time frame reversal. There's nothing really to the left of you to use, okay? And all you're really trading is a turtle soup inside of a key level, okay? There's no lower time frame level. There's no intermediate term high or low. Then I will just use a static stop loss. Now, a static stop loss can be different from time to time. Sometimes you can use 10 pip, 15 pip, 20 pip. If you want to be more conservative, 25, 30. It all depends, right? The volatility in the market is always changing. There's some times where a 30 pip stop loss is huge, and there's some times where a 30 pip stop loss isn't that big, right? So there's a volatility discretion when it comes to static stop losses, where you kind of have to test out what works best for you, okay? But if there's nothing to the left of me, I will simply use a static pip amount and sell the high or buy the low. And the reason of that is I'm basically trading the idea that the key level should hold and that this high here should be broken out of falsely. So if this high starts getting displaced through and my stop loss is hit, well, it's likely that this isn't a turtle soup and I want to be out of the trade, right? And that's why, again, I prefer turtle soup. Is when your stop loss gets hit, you're wrong. There's no, oh, I could maybe re-enter here. No, your key level isn't holding. Your range isn't rejecting. You're simply wrong. Go to the next idea. Okay. When you trade reactionary entries, you oftentimes can get stopped. Maybe it soups again. It starts going lower and you can want to enter again. Right. And then one wrong idea can turn into 2 losses or 3 losses. Right. When you strictly trade turtle soup, or at least majority of the time trade turtle soup, it's very black and white. My stop loss is hit, I'm wrong. On to the next idea, okay? And that helps risk management a lot and emotional control when you know that it's just one and done every setup. One shot, either works or it doesn't, on to the next, okay? Now, when we go to, or I guess finishing off of turtle soup, if we go to the confirmation entries, right? So the 15-minute, or if you're more intraday, you can use 5 or 1. So basically after you see that 15-minute shift in order flow for the confirmation entries, let's say, for example, here, you see the shift in order flow, you see we create a order block, you enter inside the order block, all right? There is a few different ways that you can use stop loss placements for confirmation entries. Number one, and probably the best, is you put your stop loss at the protected low. So if you're trading a reaction, you trust the low that is the low that we created the change in order flow, right? So again, whether your retracement is to an order block, retracement is into a gap, retracement is to in a breaker, whatever it is, you trust the low that created the shift in order flow, okay? That's number one. Number two is you can trust key levels created off of the low, right? So let's say you didn't get this early reaction or shift in order flow here, but you saw this shift in order flow and you took this retracement into this gap. Okay. Well, a stop loss could be possibly below the breaker, right? Why? Because a lower time from key level should protect your stop loss from being hit in a bullish market. Okay. The same way if we look, let's say to this setup, if you waited for a shift of this high here and then took a retracement, you can see the order block should protect your entry, or excuse me, your stop loss, and you can put it below at the low, right? So the two different stop loss placements I would use in reaction entries is either the very lower high or a key level created off the lower high, right? And again, it all depends on how willing you are to be conservative or how risky you want to be with how tight it is. Again, that's up to the individual and based off of how you trade. If you scalp, intraday, swing, it'll be dependent per person, right? And then for OT entries, it is the exact same thing as turtle soup, right? You have your high time from level, you have your soup. Is there any lows to the left or any key levels to the left? Well, we have a low here. If that's too wide for you, we also have a gap coinciding. Put it below the gap here, right? There's plenty of options you can use, and it's all discretionary based off of how conservative or how risky, if you will, you want your stop loss placement to be, all right? But those are the entry models that I use, the stop loss techniques that I use, and that is all for today's video. So I hope this was insightful, and I will catch you guys in the next one.